Welcome back, friends, all you motivated and inspired people. I'm pumped to see you here again. I'm Ian Group, the host of Fireside Chats. This week is a great episode. I've got my buddy Taylor Sohns on. Taylor started Life Goal Investments. Taylor reached out to me a month ago and we had a great conversation. What I specifically loved is that Taylor, along with his brother, saw a gap in the market. But what did they do to fill this gap? They started their own ETF. How do you start an ETF? How does anybody have time to do that? Taylor actually went from a corporate job on Wall Street to this. So if you're interested in leveling up your career, maybe switching from a corporate job to starting something on your own, or getting deeper into the world of finance, you've got to listen to this. Before we jump in, please take a moment to subscribe. Also, because we talk about investments in here, please read the show notes for an important disclaimer. Everything I say in here is for informational and educational purposes only. You have to do your own research before making any investment. With that, enjoy the show. Taylor, welcome back to Fireside Chats, I'll say.
Thanks so much for having me in. Appreciate it, man.
I say welcome back because for anybody watching this, we actually recorded this episode last night, but the Zoom recording got messed up. So we're doing it again. But take two will be even better.
That's right. Always a silver lining.
Absolutely. So why don't you tell everybody who you are just to introduce yourself?
Yeah, absolutely. So my name is Taylor Sohns. I'm 33 years old. I live in a town called Saratoga Springs, which is in upstate New York. Born and raised here. Went to college in New York State. I lived in Indiana for about 5 years for work before moving back here a couple of years ago. And I have an awesome wife and two little girls.
That's great. Family man. So we actually connected a few weeks ago and you started an ETF, which I think is awesome. I'm an ETF investor. I know a lot of my followers are ETF investors. So I would love to know, first of all, what your ETF is all about and how you actually go about starting it.
Yeah, absolutely. So just by way of background, before starting this ETF company called Life Goal Investments, which is what I'm the co-founder of, I co-founded it with my brother. And we both spent a combined 25 years on Wall Street prior to starting this. So what we were doing when we were on Wall Street was we were working on building portfolios for some of the richest families around the United States. So think about families that have $50, $100 million. We would go in and take different investment pieces, put it together, and build the ideal portfolio for them. And we grew up in a little one red light town, very modest roots, in one of the poorer counties in New York State in the middle of the Catskill Mountains. And we just looked at ourselves at some point and said, hey, is this really what we're meant to do? And what I mean by that was, we're helping out these mass affluent folks, these extremely wealthy folks with their financial situations. But the people we grew up with next door, they don't have someone helping them out. And we said, is there a way to build what we were doing for those very, very wealthy folks? And what I mean by that is constructing portfolios that have stock, bond, real estate, commodity exposures, all packaged in one thing. But can we do it with the availability to be bought on any Robinhood, Schwab, Fidelity platform for $10 a share? And we said, yes, the only way to do this is to package it as an ETF.
Interesting.
And so that was the mission that we started with. And that was the crux of the idea, and then formed Life Goal eventually.
So the reason that I am in the personal finance space is I'm super passionate about it. Was that a passion that led you to finance? Are you attentive to personal finance today?
Very much so. So I would say this, a lot of folks in the personal finance space talk about budgeting, which is extremely important. Full disclosure, I don't keep an active budget, but I am incredibly frugal by nature. And that's just the way I was wired. So I always say to my wife, and she would smack me if she knew I was going to say this, but I always tell her, frugal is sexy. And what I mean by that is, instead of looking to look flashy or whatever it is, I just have never had that nature. It's always been more about, hey, what can I put away? What can I save? And realistically, that did me and my family a real solid, because I have a wife and two little girls, as I mentioned before. So when we thought about starting Life Goal Investments, it was a big step back away from taking a significant salary that I had before to going to literally zero and starting a new company. And that would not have been possible had I not been just naturally so frugal in the past and been able to stack chips away on the side to allow me the ability and the flexibility to go ahead and make this move.
I think that's a really good point for anybody who's thinking about making the jump in their career or starting a business to have that base. I'm curious if you could talk a little bit more about that and also talk about the emotions that went into starting your own business. Was it scary? Was it exciting? Maybe all of the above?
All the above, absolutely. For context, I worked for a Wall Street firm for 10 years. So I'm not saying that is an incredibly long career, but Wall Street does have the stereotype of paying well. And admittedly, they did pay well. And I lived extremely modestly. For example, I was making a significant, and this isn't, intended to be me bragging or anything like that. I worked hard. That's what I did. And that's what I was good at. I don't have this extraordinary skill set that everybody else doesn't have. Work ethic is what drove the success that I saw. But we were living in Indiana, and when we were living in Indiana for almost 5 years, my wife and I were living in a 1-bedroom apartment, paying under $1,000 a month in rent, which is just phenomenally inexpensive. Now, part of that is a function of living in Indiana and having cost of living be very cheap. But nonetheless, that was not a luxurious place, although we could have afforded one at the time. And we didn't have the need for it. And so instead of spending that money on, a big house or a fancy apartment or something like that, we said, hey, let's sock it aside, get it invested, start investing early and compound that wealth. And when it comes to the actual decision-making process, when we decided to step away from our career, being my brother and I, step away from our career and start Life Goal Investments, it was both a incredibly exciting endeavor, but also an incredibly scary endeavor. And I think that if anyone tells you starting a new business isn't scary, that's probably just not fully true. I am a little bit more of a conservative person by nature, comes along with that frugal mentality and all that. But as we all know, and as you hear a lot of very successful people talk about, taking risks is the key to really outsized gains at the end of the day. And my brother, on the other hand, we grew up in the same household. We have two very different mentalities, two very different skill sets, is much more entrepreneurial than me. And so when we decided to launch Life Goal Investments, it was all predicated on the situation that Brett found himself in a situation that many people find themselves in right now. So I'll explain that to you. So my brother lives in downtown Saratoga Springs with a wife and a daughter. And he lives in a condo that's relatively small. And so a little over a year ago, he started the intention to build a house outside of town. And so when COVID hit, so I guess it was more than a year ago, almost 2 years ago now, when COVID hit, he said to himself, you know what? We're likely to see an economic contraction because of this, and housing prices could actually come down. And boy, he obviously couldn't have been any wronger, as housing prices have boomed on the other side, right? So since COVID, we've seen housing pricing start to tick up at 5, 10, 15, 20%. Over the last 12 months, home prices have gone up at 18.4%. Now, Brett, my brother, like most people, was sitting in something like a savings account. And the problem with sitting in a savings account is savings accounts literally yield 0% right now, 0.05.
Yeah,
exactly.
It's just like losing value.
Right, exactly right. It's a scary proposition when you're looking at houses going up almost 20% and sitting in something that's garnering 0%. So you're effectively losing 20% purchasing power. So at some point, he realized that home prices are taking off, and it's not likely to slow down in any meaningful time frame. So we need to think about putting together a different portfolio here. So Brett turned to me and the background that we both have, and we built the portfolio for him.
Cool.
And then we said, and Brett said, there's got to be something out there that already exists. There's got to be an ETF to help people with this situation. Look at millennials. The vast majority of millennials are either entering or going to be entering that period of time where they're buying homes.
Right.
And we looked around and there was nothing. And so we launched the Life Goal Home Down Payment Investment ETF. Cool. The ticker on it is HOM. And the intention of this ETF is to have two goals be fulfilled. One, a conservatively managed investment. We know that if this is home down payment dollars, we can't have a ton of volatility, because what happens if there's a drawdown right before you need to purchase?
Yeah, you'd be out of luck. I mean, what would you do?
Right. And the second thing is we want to help offset home price inflation. So this is what the portfolio looks like. And we built it for Brett. And then since then, we've built it that is now available on the New York Stock Exchange for everybody.
Right.
And so it's about 60% bonds. Now the bonds control the volatility and the downside capture. They're a relatively conservative investment. And they also garner a fairly significant yield relative to something like a savings account.
Mm-hmm.
Second part is there's 5 to 10% in commodities. That commodity exposure helps in an inflationary environment, which we tend to see ourselves in right now.
Mm-hmm.
And then the remainder of the portfolio falls in stocks. Now, the innovative portion of this stock portfolio is the fact that half of that stock exposure is specifically in housing related companies. So
Nice.
think about things like Home Depot, Lowe's,
Yep.
home builders. Why would you own those? Well, if you're looking to use this as a potential future home purchase asset, why not have exposure to assets that will go up as home prices go up?
Right. Makes sense.
So it effectively acts as a hedge there. Now, all of that is packaged in one portfolio.
Mm-hmm.
It's actively managed, where if the market does certain things, we may determine that it needs a little bit less bond exposure and a little bit more stock exposure, vice versa, whatever it may be.
One idea I had and thought is, okay, maybe I'm not buying a home, but maybe I'm a real estate investor. Could I use this to kind of put away my cash prior to making that investment as well? Is that something that you would advise people?
I love it, Ian. I love it. You're hitting the nail on the head. So this fits for two people, right? It fits for someone being a home buyer, but a real estate buyer is buying a home just like a home buyer is. It might be a different intention of what they're doing with it, but at the end of the day, they're still buying that asset that's seen this massive inflation over the past 12 and 24 months.
Right.
So the intention of those assets still is to sit there in a relatively conservative vehicle that's going to help offset home price inflation. And the other nice thing that I didn't mention, Ian, is that this product streams about a 2% dividend that pays monthly. So again, going back to the conversation of savings accounts yielding 0% or 0.05 to be more exact, this yields 2% and is paid out on a monthly basis.
You have this ETF now. I imagine there's a ton of work, or you have a whole company with a portfolio of ETFs, but what goes into actually starting one of these? I mean, what is your day-to-day like?
Yeah, it's an interesting question. So again, before starting this, we would go around and work with these families and we would pull together the pieces of real estate, the pieces of bond exposure, the pieces of stock exposure, the piece of commodity exposure, and build it together. And to do that, you had to have a lot of money. And we said, again, if you can package this all within one ETF, it would be accessible to anybody.
Right.
But this was something that we have never done before. We had put all the pieces together, but never put that wrapper around it, which is the ETF wrapper in the past.
And by the way, you and your brother had an expertise in this. It might not be something that everybody would know how to do. Maybe the typical investor can go out to their brokerage and buy VOO or whatever other index fund, but you kind of have like a specialty with this.
Correct. Yeah. So my brother and I both have an undergrad and grad degree in business and finance.
Right.
And then we both have a certified investment management analyst designation, and I have a certified financial planner designation.
Okay.
So each of those designations takes 1 year in their own right, on top of an MBA and an undergrad degree. So that's all we've ever done for our careers. And to your point, Ian, if your intention is just long-term investment, look out to the future, and 30 years from now, I'm able to close my eyes, put money in it now, take it out 30 years from now, then an index investment is not the worst thing to do in the world.
Sure.
But if it's more intermediate in time frame, and we're seeing this in the market right now, are you able to put your money in an exclusively stock index for something you may purchase a year, 2 years, 3 years out?
Right.
Likely not, right? We're seeing a pullback of almost 20% in the NASDAQ right now in the tech-related indice. We're seeing about a 10% pullback right now in the S&P 500. And who knows where we're going to find a bottom.
Yep.
But at the end of the day, what you need to do is put together one cohesive portfolio that has the underlying pieces where you understand correlation. How does the bond and stock react together?
Yeah.
What happens when you add in a bit of commodity exposure? What happens with real estate exposure? And create this overall portfolio. Now, some of it's fundamentally driven in decisions on our end, but then it's also run through a software that's a very expensive software to start to determine how things are going to react given different market environments and different conditions. But back to your question of building out the ETF. that was something that we had never done before. We'd always
Mm-hmm.
put the pieces together, but again, the wrap around the outside had never been done by us.
Yep.
And so Brett texted me this original idea on December 17th, the first time I had heard about this idea, December 17th of last year. And we were able to do it and get it accomplished and launched on the New York Stock Exchange by September 9th of this year.
Wow.
What goes into that is a lot of different pieces. There are 12 underlying firms that act as partner firms to us. So Brett and I are kind of the quarterbacks of the show, getting the ship headed in the right direction.
Right.
And we have underlying players that all fill roles. So like an example of something that we don't do, we put together a list of exactly what's going to be held and exactly the percentages held of each underlying security, but we don't physically place those trades. We have a trader that does it, someone that trades billions of dollars worth of underlying portfolios because they get the best pricing.
Right.
And so we have those experts on our side kind of pushing things in a direction. And it's really funny when you think about kind of Brett and I told you he's entrepreneurial. I'm a little bit more risk averse. Our skill set, we grew up with the same parents, same household, same everything, but we're very different.
Divert.
It is. And what Brett is really good at is he's kind of a visionary. He sees ideas. He sees what may be coming in the market. And I'm a little bit better about maybe packaging that idea and making it more relatable. At the end of the day, we've talked about our home ETF, but we launched 3 ETFs in the market. And the overarching theme of our ETFs is making investing easier on folks. So when you think about the other 2 ETFs that we launched, I'll just mention the name and you'll get an idea of what they're supposed to do for somebody, is the Life Goal Wealth Builder ETF and the Life Goal Conservative Wealth Builder ETF. So what you see in those names is it should tell you right on the onset, okay, this is kind of what the intention of this is to do. Life Goal Wealth Builder is that long-term wealth building vehicle that we've built. And so again, at the end of the day, we realize that for a lot of the retail public, investing is a very, very scary topic. There's so many different options out there, so many opportunities, so many names they don't understand. They need someone to break it down to its basics and put together a portfolio for them that meets a lot of the general population's needs. And that's what we tried to do with these products that we've built. And then the home one being much more specific to, we're in a real situation right now where home down payments are very unaffordable, as the average home in the United States in Q3 of last year, sold for over $423,000.
Yeah.
And the median household income in the United States is less than $80,000.
Yeah, right.
The numbers just really are tough to align. So it needs a product in order to fill that gap and help build that wealth for that home down payment that's coming in the future.
That's great. I mean, look, you're trying to make this accessible. I love that you're out in the world trying to educate as well. So kudos to you guys for putting this together and also taking the initiative to start something new. I think it's great. Last question before we wrap up, which is, you're a dad, you're a husband, you got 2 kids. What's the secret sauce to making this work?
Oh, man, if you have the secret sauce, please tell me, because I don't have it.
We'll come up with our own sauce here.
Yeah, exactly. Everyone's got their own flavor of sauce on this, but it's interesting. This opportunity and this, what we felt was a gap in the market, came up, and we felt we were well suited to fill that gap. We had the skill set that was needed in order to kind of build out the product and the company to meet it. Luckily, we had put all those chips away, like I mentioned before, that allowed us to do it. But when it comes to the home life, we were in family growth mode. My wife was just in the onset of getting pregnant with our second daughter when this company was coming to fruition. So it is tough. There's no doubt about it. I'm lucky in the fact that my wife is incredibly understanding. She has her own career that's been a pretty darn good career herself, and she continues to be employed, which helps us out with things like health insurance, et cetera. But we have those 2 little girls that we have to juggle as well. And so I don't know that there's a secret sauce. What I do and what works for me won't work for everybody else, but I'm an early riser. So one of the things I do is I get up early in the morning, a couple hours before everyone else in the household, and I can bang out a fair amount of work right then. And then when the girls get up, I can be dad for an hour or so before the regular work day starts for everybody else. And then the afternoon and the evening, I'm not a great late day worker. at the end of the day, my brain kind of shuts down,
Got
but
to
it
shut
works
it down.
really well on the front end.
Yeah.
So it works well on the front end. So I try to abuse my brain on the front end and get everything I can out of it there. And then by 5 o'clock, I'm done for the day for the most part, going back to being dad. And maybe I circle back for another hour at the end of the day just to check in, or half hour to check in and make sure everything's wrapped up at the end of the day. Again, I'm no miracle worker, Ian. I look to improve every day and try to improve every day, but that's been kind of and that's been my entire career. The early morning has been good to me for my entire career. Before I had kids, before I had a wife, that was when I realized my brain was hitting on all cylinders. And that's when I tried to get the most out of it.
I think a lot of success in your day and in career comes down to being really self-aware. What are your strengths? What are your weaknesses? And look, I think it's great that you know that about yourself. And I hope, and I'd encourage anybody listening to think about what makes them their best self throughout the day. And I also love, you touched on it before, the dynamic between you and your brother. Not all siblings can work together, but you guys, you kind of have this yin and yang that makes it all work. So I'd love to hear it. Why don't, as we wrap up, why don't you just tell people where they can find you and Life Goal Investments?
Yeah, absolutely. And before I even do that, Ian, kudos to you for having me on. Thank you so much for that. The other guests you've had on are absolutely phenomenal, covering real estate topics, all the different things. You're doing unbelievable work on Instagram. So keep it up on your end. We're just trying to keep pace with you as best we can.
Appreciate it.
But now you can find us at lifegoalinvestments.com. And there's some tools when it comes to personal finance on there. There's some tools when it comes to compounding returns calculators, see what happens when you invest early in life and how much that can pay dividends down the line. And then the other place you can find us is on Instagram at Life Goal Investments. And we put out a lot of information that comes down to the psychology of investing, that comes down to just overall economic information. It's not product centric. On our Instagram, it's more broad-based. Come on and learn. Hopefully we can shed some light on some topics you have questions on.
Fantastic. Taylor, real pleasure. Thank you.
Thanks so much, Ian.
See ya. Thanks for watching. I hope you enjoyed the episode. But listen, the best way to remember something is to write it down. So go to the comments, write down what you learned, and if you want bonus points, go out in the world and do it. Until next time, I'm Ian Group. Peace.